Firstly, I wanted to talk about defence because everyone's talking about defence right now. We've got the China defence spending. We've got the prospect of perhaps even the US spending more on defence, Europe spending more on defence. But these names in this industry, they've run up quite a fair bit on the back of all of this. So is there more upside, do you think, in the price, or is all that upside already baked in?
It depends on where you're looking. So if you're looking at companies like Raytheon or even Northrop Grumman, they actually are relatively undervalued compared to what they could be. And so especially Northrop, because that stock actually fell back in the end of the year to 2022 and has been trying to base here. So, we've been looking at it trading somewhere right now at around 368, 370. And I think if that thing can get over 400, that's probably very telling. And then Raytheon's in better shape, but that too has been trading in a range between, say, 98 and 101, 102. So I'd be watching for those ranges to break, and I think that tells you that obviously defense stocks, there's a reason why they're going up.
Now, obviously with the Ukraine war and all of the increased tension, I've got to ask you about the impact on commodities, because oil is obviously first and foremost. We've had a raft of people also suggesting that there's upside to come. But in your mind, if you were to be getting in now, buying some of those forward contracts, is your expectation that we're going to see a short-term lift, or is it going to be something far more sustained because of the supply-demand dynamics?
It could be far more sustained, and it would not just be supply-demand, obviously going back to the geopolitical headwinds that we talked about before. Anything could happen. But yeah, I think that oil, I was really particularly interested in it once it looked like that base between 65, say, and $70 a barrel was going to hold. And I think it's very possible that we get back up to $95 a barrel. We get back over $100 a barrel. Again, look around, means things are going on. And oil could go much higher. It's one of those emotional trades like the options we were talking about, and actually could have some basis in fundamentals.
Let's stick in commodities for a second, because there's been so much chatter about the China reopening and like the impact of commodities there, but then you have the lines that come out of the NDRC suggesting that they're going to be trying to do more to put a little bit more of a roof on commodity pricing. Do you think that anyone trying to play commodities, whether it be, the base metals or the likes of the bulks like iron ore, they should be mindful that in so much as there's that China growth upside, that the Chinese authorities are going to be doing everything they can possible to try and cap the lift?
Well, I think that's a really good point. But, commodities in and of themselves are their own beast because they tend to be volatile. And again, people aren't really necessarily used to trading commodities because they've kind of been out of fashion until the last couple of years. They really weren't in fashion since, let's say, 1979 through 1981. So you have to understand that even then, when they started peaking, they went down 40% and then went back up. So I think in terms of commodities, what you really have to remember is a couple of things. Number one is you can't just create, at least not yet, commodities through technology. It's just not there. You can't go into a mine and create something like copper or steel. It's either there or it's not. And then there's all the problems that even once you get it out. The same thing with food. You can grow food, but there's cycles in terms of growing food, and then there's food security. And I think that's really what we're experiencing with all these commodities. People like to keep talking about China demand and supply chain, and all of this has gone away. But the price of sugar, and I know we talked about this last time, is telling me that something as popular and as some ways insidious, but also omnipresent because it's everywhere, has held up very strong. So all around commodities, I think, are still ready to percolate, and anything can spark those, including a declining dollar, but certainly all the other things we've talked about as well. And China, US, you can raise margins, but you can't stop the trade, at least not initially.